G'day guys, July 13, 2023, this is Peaks Investing. We've got the US crude oil price analysis, and on the daily here and the weekly we're in a bullish mode, and we've got a couple of divergence to show you and a change to our projection on the hourly. Now first off, on the weekly we've got a bullish mode. It's been that way for a couple of weeks now. Our oscillator's ever so slightly turned up, as that's in line with the price as well, and the CCI moving to the upside. So bullish on the weekly. There's no real divergence to talk about on the weekly. We always look out for divergence for any change potential. On the daily, we did have this support at 67.12 and a resistance at 72.70, and we did have a projected target during that area, and that was because of this bullish divergence on the CCI versus a triple bottom on the price. Eventually the CCI kept going up and it hit our target since our last video, so we did say watch out for that divergence. And that divergence, we set it at a conservative level just above our entry level, which would have been somewhere probably in that candle there. I can't remember the exact area it would have entered, and that was just around the closest Fibonacci range, which happens to be the 61% level of that wider range there. And again, Fibonacci is a key area, and if it breaks through there, then we're going to see further upside. You can see there it's currently resting on that 61 exactly today, even though that wick's gone a bit higher, but that candle's just resting there on that wick. Now, so this is the daily. On the hourly, again, this was drawn before the last video. I've kept this projection in there to show you where it is, or where it was and where it is now. So again, here we've got a bearish divergence. It's hit our daily target, so this is an independent divergence. It's on the hourly. This was another independent divergence, a bullish divergence on the hourly as well. And you can see there that was a flat bottom, a double bottom there. And we projected it to rise, and we set an initial target in that range there, just a very conservative target area, that little square there. That would have been the closest Fibonacci range between that support and resistance area. Okay, so where are we today? We've got a bearish divergence, which means if you're going along, probably start taking profits. Now you'll notice the CCI is still dropping, so we're going to move that trend line to, and what I'm doing here is I'm moving it to about the highest point correlating with the price. So I'm going to remove this channel and this Fibonacci because that's no longer valid, and I'm going to move that eventually. Let me just delete the whole thing and I'll redraw it. So we'll go from that where we started, and I'm going to move it to that high point. Now you'll notice that's not far from there, so that's probably the highest point of that price range. So remember, with these approaches, so long as the price keeps going up and the CCI keeps going down, we always bring it out and take it to the highest price point along with the CCI declining, as you can see there. So the other thing I want to do as well is remove this minor resistance, and I'm going to move this major resistance to that high point. That's our key resistance now. You'll notice it's hit it a couple of times. Now it could always punch through that. There's no guarantee it's going to bounce from there. So what we need to do now is wait for it to take a bit of a nosedive. And if you're trading this, what I would do, you draw a channel between the highs and lows, or the highest bar and the lowest bar of that divergence range. So let's assuming this starts retracing to the downside. Of course, if the price kept going up, then you have to redraw all these parameters. But let's assuming it started turning down from today. Then you draw this channel, as I did, and you would draw a Fibonacci. Now, again, you can take it to any significant low. You can take it to that level, or even that level. I'll just take it to this level and see what it shows in terms of, you can see there it's very close to what we had last time in terms of a target range. So let's assuming it comes and breaks through this channel. That would be your entry point to go short, and to be extra conservative, that would be your initial target area. I like taking the closest Fibonacci range available, and if you're a bit more adventurous, I would bring that target range down to that 61%. So target range anywhere in there. So that would be my closest target if it breaks through this level here. So just keep an eye on that. Again, only if the price starts retracing. If the price breaks through that, then you have to redraw all these parameters, the channel, bring it up to it'll probably be the same channel, but you'd have to raise the Fibonacci level to wherever it stops. Okay, so that's the divergence on the hourly, and we'll keep an eye on that. So always remember the trend following strategy, when the weekly and the daily are aligned with the hourly, that's a separate strategy to the divergence, and the divergence are all independent to each other, and they're independent from each time frame. So if you would like to get some more information, subscribe to my Patreon page and make a donation there. And we also, on that channel, we also do weekly scans of stocks, currencies and commodities with various divergence outlined, even for shares. And feel free to subscribe, like and share the channel. Thanks for watching, and see you in a future video.